In some of my classes, we've been talking a lot about the later stage of startups. So after a couple of years, and of course, from an investor perspective, they are usually striving for an exit. Is that something that you're thinking about yourself? Like, how do you move on from this company, or are you more closely attached to RAIZE? That you
we at RAIZE, we never had venture capitalists as investors. Okay, so we actually avoided that road. Okay, so we raised money in the past, but we always raised it with more traditional and long-term investors. So family offices, institutional investors that would be in this for the long run. Okay, and when I mean long run, I don't mean 10 years. I would mean people that if they had to hold it for 50 years, they would hold the stock for 50 years. Okay, and that's it has advantages and disadvantages. So probably we didn't raise as much money as we would have if we had went for the venture capital road, but it also gave us a lot of stability. It also forced us to have a sort of different strategy. Okay, so we did an IPO in 2018, so the company was only 3.5 years old, very, very young company, and it was more of a capital market strategy. Okay, so if we want to raise money and we are listed, it's much easier, and so we avoid that sort of pressure from an exit that you were talking about. So startups start to get older, they get around 8-10 years old, and VC funds want to exit. Who is going to buy? And that puts a lot of stress in the business. Personally, I still own around 19% of RAIZE, and I think I will hold the stock for a very, very long time. Okay, so it's actually independent of it's two independent tracks. Something is to hold capital on the firm. The other thing is working on the firm and working. In terms of capital, I'm very, very comfortable with it. So I don't want to disconnect from RAIZE.
I think that's amazing. And also, this is a very different approach to what we see with most startups. Like you said, the venture capital road, it's very, let's say, unique. Like venture capital has a very particular mindset in terms of what they are looking for and when. And then you are following a very different approach. And like you said,
so from our perspective, from a very early stage, we never thought that, and I think for taking a step back before, one of the most critical decisions for a startup is to find the right type of investors. Okay, you can have the best idea in the world, you can have the best execution team in the world. If you don't have the right type of equity investor, it won't work. It won't work because the equity investor will be pushing in a different way than you are, and it won't. The match won't be there. Okay, so probably the idea won't click. So we always knew, or we had this idea that venture capitalists weren't probably the best type of investor for an industry that is highly regulated, where growth rates aren't comparable to tech growth rates or software growth rates. It actually doesn't work like that, where the time to implement the business is much larger than the usual venture capital investment period. And so we never thought that that avenue was for us as a financial company. Okay, so other fintechs have gone through this road. I think that's one of the major challenges of the fintech industry for the next few years is how will they be able to switch from this sort of venture capital based model, which is kind of exhausted, to a more traditional type of investor model. That's a very big question mark still in the industry. So for us, yes, a very unique path in that sense.
Wow, impressive, and also a bold decision, I think, because it's a
Yeah.
big decision.
Uh, yes, it's a big decision, but it also had it had huge benefits. Okay, there are huge benefits of being a listed company, which I think the majority of companies isn't able to fully appreciate nowadays. Okay, since since also the media awareness and media buzz floats or tends to float a lot towards VCs and private equity firms. I think traditional capital markets have lost some of its glamour, if you want, and so companies don't fully appreciate the advantages, the exposure that you have when you are a listed company, which for us has been very beneficial.
What kind of benefits other than public exposure are you thinking of right now?
Credibility. So being a listed company always brings a lot of credibility to the business, and it opens up it opens you up to a lot more investors. Okay, if you are a listed company nowadays, literally anyone in the globe can actually buy stock in your company. So your capital raising is actually much broader than just a few venture capital firms. Okay, so actually, it's the most diversified way that you can have to raise capital, and that's a very, very big advantage.
I see.